Hi, this is Raghi Horner, and this is a walk through one of the foundational concepts behind my personal trading, and a concept that is nearly a century old, and that is the themes of Dow theory. So Charles Dow created these ideas behind how he felt the markets moved, and therefore also the psychology behind the movements. There are 6 basic themes of Dow theory, and this is how I've come to know them, and this is how I've come to use them in my trading, and how they've also manifested in my development of the 34 EMA wave and of my grab candles, both of which are available on the Interbank FX Trader 4 platform. There are 3 main movements of the market, and Dow theory talks about these movements in short swing, a medium swing, and a main movement. Now, I don't use all the themes of Dow theory. I'm going to focus in on the ones that I feel are the most helpful to traders, especially in the forex realm, and using the tools that I teach people how to use. I'm interested in the main movement. That's the primary trend. You might hear me refer to a directional bias or the dominant psychology of the market, and that is absolutely influenced by this first theme, which is that main movement of the market. Market trends, so we take that main movement, market trends have 3 phases. And within the way the psychology works, if you're looking at it through the eyes of Dow theory, prices can move at a sideways, narrow range. That's accumulation. They can move up higher. They can also move down lower, even though Charles Dow did not refer to this as one of the main phases. And they can move in a much wider, more volatile fashion, which is known as distribution. Here on this chart of the dollar Swissy, you can see the movement lower, which we could refer to as marked down or a downtrend. You can see the movement higher, and then you can see the wide range where there is not a dominant trend, although there is organization of sentiment and momentum that's making a wide range. Dow theory was developed using the stock market, and of course there's a bullish bias to the stock market, so the next theme that the stock market discounts all news, we can just look at that as the overall market. The market discounts all moves, and the markets are a forward-looking vehicle, whether you're looking at forex, whether you're looking at futures, whether you're looking at equities. Everything is always forward-looking, and even though price action will digest or incorporate, discount this information as soon as it's available, there is also this type of forecasting where we look at the expectation that we have for news that is scheduled to be released or broader economic events that are scheduled to occur, and we begin to incorporate or discount our expectations into price action. So again, it's about discounting all the news even before it's necessarily been confirmed. There are some other aspects of Dow theory, and the ones that I use of the remaining 4, that market averages must confirm each other. Well, you might ask, how does a forex trader use this information? Well, market averages can be viewed in many ways as the correlation even between pairs, as a correlation between futures contracts. It's not something I'm going to get into in depth here, but there should be a certain amount of cooperation between the markets that affect one another. Another aspect or theme of Dow theory is that trends are confirmed by volume. Well, we can look at volume or participation differently than a stock or futures trader, because there isn't really a single exchange for foreign exchange. What we look at instead could be the expected rhythm of the market. We could look at the volatility that comes and goes with each financial center. Remember that forex is the largest market in comparison to futures and equities. So when I look at volume, or when I envision participation. And to measure that, we have an excellent tool here at IBFX called Power Stats. We have videos on this, but that's one of the ways that I will confirm trends. The last theme is that trends exist until there are signals to prove that they have ended. Well, that's a pretty broad, basic statement, is it not? Well, we can use technical analysis and charting tools to determine when a trend has ended, but one of the tools that I use consistently is the 34 EMA wave and grab candles. And I can identify trends with the organization of similar colors, for example, the steadiness of the red on this daily chart of the dollar Swissy, or the steadiness of the green, as well as the angle of the 34 EMA wave. So that's how this forex trader takes the ideas of Dow theory and applies them to the forex market.